That picture is so good of me, isn't it? It's so good. It was airbrushed to death.
Good afternoon, everybody, and welcome to the first ever Wages Wednesday. No, you're not imagining it. It's not Friday, thankfully. I'm here today because we have this special event, the first ever Wages Wednesday, which is going to become part of a regular series. Not necessarily always on Wednesday, as obviously Thursday is normally payday, but we'll see how that goes. I am delighted that I am sharing my space today with Ian Holloway. And Ian is the person who was voted as the best person you've ever listened to about payroll at conference. So we thought, well, look, we want to do something on payroll because over a third of our members are also registered with us as payroll agents. They've done their quals, they're doing salary for their clients. And we're getting a lot of calls, particularly on the technical advice line about payroll. So we thought, well, we better go to somebody who actually knows what they're on about. Go to, I won't call him a guru because I always think that's a bit of a rude word for some reason. People who claim to be gurus never are in my mind. So anyway.
Makes me sound old.
So hello, Ian. How are you?
I'm good, thank you. I'm good. Thanks very much for having me.
Good. You and I obviously use slightly different hairdressers, but apart from that, I think we're both looking very smart today. So we are being serious about what we're talking about.
Absolutely.
And so there's a lot happening at the moment in wages and salaries. New tax year just starting, things changing around a bit. I want to talk to you a bit later on about computerization and various things, but I'm also dying to see your presentation. So whenever you're ready, I suggest you get us started.
Okay. All right. Thanks, Gary. Thanks very much. So let's share this. Can you see that okay?
Yeah.
Okay, terrific. So what I want to talk about, the title of the presentation is Ending 2020-21, which we've just done, starting the new tax year, which we did yesterday. First of all, I want to talk about my role going forward, and I really do hope that the two of us, sort of like myself and the ICB and members, are going to be able to work together, providing regular updates for all of you doing bookkeeping that are also payroll professionals as well, sharing anything that I have got, any knowledge that I might have for your benefit. Plus, I want you to interact with me and tell me what you'd particularly like to discuss. So definitely a two-way working relationship going forward. And if you've got any questions, comments, do drop them in at the bottom of in the chat box. And if we get time, we'll discuss them at the end. If I don't get time to address them, honestly, I promise that I will come back to you via the ICB probably. So do any comments or anything, just drop in the chat box and then we'll address it. So what I want to talk about is, as I mentioned, finishing one tax year. And I always refer to it as a preparation process, and preparing to start the new tax year. But in the middle of the old tax year and the new tax year, what I want to talk about is the UK budget and the impact that that's going to have on bookkeeping and payroll professionals for a number of years to come. Then I'm going to talk about tax year 2021-22, things you should be aware of. And there's two documents that I've put together. One is called the Bookkeeper's Library 2021-22. And that's a list of links to a lot of places that you should want to get information from. For example, the pay adjustment tables, the taxable pay tables, the SSP linking tables, that kind of thing. So it's quite a big document with a lot of different links. And then I've done another document called Rates and Allowances for 21-22, because what I hate talking about when talking about the new tax year is, well, the rate of tax is this, and in Scotland it's this, and the lower earnings limit is this. It's just boring. So I've put it all together in one Rates and Allowances document, which will be shared with you after the webinar. And then lastly, I want to talk about a couple of consultations. So it's one consultation document and one consultation document that I really think that we should be going back to the government and expressing a bookkeeping opinion. I know one of them has already been responded to by the ICB, but I'd like to be part of preparing a response for the next submission. submission. So let's talk about the tax year 2020-21, which we just finished. So we started a new one yesterday, we just finished. So pause for a second before we carry on. Make sure you've downloaded the new starter checklist. One came in valid from yesterday for new starters from yesterday. And the new starter checklist you're looking for on gov.uk is the one that's got the reference at the bottom 221. So that's the printable version, or the online version, bottom left-hand corner, it says version 5. So those are the new starter checklists that you should be using. If you've got any expatriates, there's an expatriate starter checklist as well. But definitely make sure that you download the new starter checklist or update any starter checklist that you might have at your organization, because the old ones will be invalid. Just in respect of the student loan plans, which is new. Have you got your P60 stationery? We haven't finished the tax year until we've issued our P60s. Remember, get your stationery. Remember, it can't be downloaded. So do you want to check with your software provider that they've got enough P60 stationery? And then consider, have you processed a week 53, a 54, or a 56 payroll? Now, you'll know if you have, because you'll have done it already. So there was no national insurance considerations. Income tax, you will have operated on a non-cumulative basis, and you will have given more pay adjustments. The thing about a week 53 payroll is there's no entitlement to that additional pay adjustment that you've just issued. And what HMRC might do is they might say, well, someone's entitled to 52 weeks worth of allowances, but this employer's given them 53 weeks worth of allowances, with the consequence that staff have been underpaid. So HMRC might send them what's called a P800, which is a notification of tax underpayment. And I think it's very, very important that if you have had a 53, a 54 for lunar payrolls, and a 54 for fortnightly, a 56 for lunar payrolls, that you communicate to your staff. You communicate the possibility that it might happen, and you communicate really from a defensive point of view. Well, this is what I've done, and what I've done is in accordance with HMRC's guidance. And if you want to refer to HMRC's guidance, you're looking at the PAYE manual, and that's the page there. And I'm going to make sure that the slides are available for you after the presentation. So there's no need to take notes. I'm going to make sure that they're available afterwards. So starting again, process your final payroll, send your final FPS, which you would have done. Hopefully you've sent your final FPS. Always remember, it must be sent on or before payday. If it's your final submission of the year for the PAYE scheme, tick the final submission of the year indicator. And do remember, it's the final submission for the PAYE scheme. So if you've got a monthly payroll and a weekly payroll, the final submission indicator should only be sent the last time a payroll is run under that PAYE scheme. EPS as normal, send the employer payment summary as normal by the 19th. If you haven't indicated on your FPS that it was the final submission of the year, you can indicate that it's the final submission of the year on your EPS. What if you make a mistake? Well, this is all on gov.uk, and I'm just replicating what's on gov.uk. So you might want to look at gov.uk if you've made a mistake. If it's before the 19th of April, send another FPS, a correcting FPS. If it's after the 19th of April, there's a new procedure in place that's mandatory for this year, and it's what they call a month 13 FPS. So the earlier year update is no longer valid. You send a month 13 FPS. Now, all of that information is on gov.uk, but I really want to make you aware if you do make a mistake, and unfortunately we do make a mistake, it all depends on when you made that mistake. Was it on or before the 19th, or was it after the 19th of April? And do remember that the EYU is only valid for certain tax years now. So 2013-14 up to and including 2017-18. Anything after that, an EYU will not be accepted by HMRC. So you might want to check with your software provider that they've got their new month 13 FPS functionality. Just pausing a second before we go into 2021-22 and talking about preparations, Remember that claiming the employment allowance is now an annual process. So you might have ticked that you wanted to claim it last year. Well, that tick will have been wiped at HMRC at midnight on the 5th of April. If you want to claim the employment allowance going forward, you'll need to tick in your payroll software again. You'll need to consider about the apprenticeship levy, and most importantly, the apprenticeship levy allowance, and whether or not you're a connected company, and whether or not you want to change any allocation of that levy allowance, that £15,000 levy allowance. Maybe you had it all last year, but maybe you want to give it to a sister company next year or something like that. So that's another consideration, a reason for pause. Small employers relief, you might have to tick this in your software. Maybe you were eligible last year, but you're not eligible this year, or vice versa. So you might have to tick it on an annual basis. So consider that small employers relief. Very important for the reclaim of statutory payments, like statutory maternity pay, where you can claim 100% plus 3% NICS comp. And this as well, and people do forget to do the basic assessment for people in employer-supported childcare schemes entering between the 6th of April 2011 up to and including the 4th of October 2018. And the basic earnings assessment is essentially a look ahead at what you think the person will be earning in the tax year 2021-22, and then adjusting the value of employer-supported childcare, and that will generally be the childcare voucher. So don't forget those 4 things there. Definitely the employment allowance one. I don't know if that's really been publicised very well, that it is an annual claims process. So if you ticked it last year, that tick will not carry forward into the new tax year. So starting again, update your payroll software on the 6th of April or earlier if you're instructed to by your software provider. Download and install basic payroll tools, or HMRC's free basic payroll tools, but be aware that it's not designed for bookkeepers or agents with more than 3 clients. And not all employers use it to actually process payrolls. They may use it just for the national insurance number verification request, or to send an employer payment summary. Maybe your software doesn't send an employer payment summary. Maybe you have to do that via basic payroll tools. Maybe your software doesn't do the NVR, the National Insurance Verification Request. Maybe you do that through basic payroll tools, or a previous year, earlier year update as well. So many reasons why it's used, but it's necessary to download the most recent one, and that is the version number there that you're looking for. So go on to gov.uk, go on to download basic payroll tools, and there's a button there, click to update. Most important things, I think, for 2021-22 are the new rates and allowances. Well, they change every year, and they've changed this year. I've done that document, which will be available for download. Then the introduction of Plan 4 student loans as well. So that's for Scottish borrowers. That could trip people up as well. And that's the main reason for the new starter checklist, so that somebody coming in can indicate whether or not they've got a Plan 1, a Plan 2, a Plan 4, or a postgraduate loan. So that's the most important reason for the starter checklist and the new expat starter checklist. And IR35. Now, I don't think that IR35 is very, very relevant for bookkeeping professionals. Tell me if I'm wrong, but if you are involved in IR35, there's a very important new marker in the payroll for anybody that is IR35 inside IR35, so off payroll rules. It's called the off payroll worker marker. Anybody that's subject to the new rules must be flagged with this marker. So that's never been in software before. You might want to, well, it should have been in software, and it should have been in software last year, or could have been in software last year. If it does apply to you off payroll working, make sure you know in your software where that off payroll worker marker is and what it does. What it does when it gets to HMRC is it suppresses student loan notices. What it does in your software.
We've had a couple of people already clicking on, I can see, saying they do deal with IR35. Nadine is one, and a couple of others. So, yeah, very relevant.
Oh, well, that's good, because I'm going to talk about IR35 a little bit going forward as well. So thank you very much indeed for that. Thank you very much indeed. But for the people where it is applicable, inside IR35 or liable to the off-payroll working rules from the 6th of April, make sure you find that off-payroll worker marker. Suppresses student loans at HMRC, and goodness only knows what it does in your software. One piece of software might do this, another piece of software might do something different. So find out where it is and what it does in your software. Gender pay gap reporting as well is another thing that could be an obligation for payroll professionals and bookkeeping professionals. And you remember last year, the reporting deadline was postponed. In actual fact, it was really just cancelled. You didn't have to do it last year at all. However, you still should have collected the data, even though it was cancelled and it didn't have to report it. And the reason you had to collect it, or you should have collected it, is because the gender pay gap reporting for the current year, so that's the data from 2020 reported in 2021, cannot be meaningful unless it's compared to the previous year. Now, the employer will have wanted to do that as well, to see how they're going with their gender pay gap issues at the organisation, if indeed there are any. So that was 2019-20, but you should have collected the data even though you didn't have to report it. 2020-21 reporting deadline has not been postponed. It has not been cancelled. And just as a reminder, that's the snapshot date, 31st of March in the public sector, due for reporting on the 31st of March 2021. And that's why it's called 2020-21. Snapshot date 2020 for reporting a year later. Private sector 2020, April, 4th of April, due for reporting. So it hasn't been postponed, but what the Employment and Human Rights Commission have said is that they will not enforce non-reporting of gender pay gap reports as long as they're submitted by the 5th of October 2021. And the big consideration for all employers, in actual fact, is that any employee that is, or any employer that's subject to gender pay gap reporting should consider the employees that they've had on furlough, because furlough is classed as a leave type, and this could affect the kind of reporting that you have to do. And I would really recommend that if you have gender pay gap reporting as an obligation, that you remember you must get it in by the 5th of October 2021, earlier if possible, and do see the Gender Equalities Office guidance dated the 23rd of February 2021, which is really, really quite good in actual fact. Other little bits and pieces. Don't forget your P60s. They must be with the employees on the 31st, by the 31st of May. Two conditions. The employee must have been employed on the 5th of April, and there must have been a liability to operate tax in the previous tax year. So somebody that started on the 1st of April was employed on the 5th of April, but there was no liability to operate tax in the previous tax year. So you could argue that that person was not due a P60. And definitely if someone's a leaver on the 4th of April, they're not due a P60. So first, second, third, fourth, they're not due a P60. What I say, though, is what about if somebody was employed on the 1st of April, new starter on the 1st of April, they were on your payroll on the 5th of April, so the last day of the tax year. There was no obligation to deduct tax for the previous year. Would you still provide them with a P60? Does your software allow you to provide them with a P60, effectively a blank one? So it will say this period 0, but it will have P45 earnings as previous employment. Bear in mind that if you don't produce them a P60, they probably won't end up with a P60 for the tax year 2020-21, because the old employer, once they've issued the P45, in actual fact, they've got shot of the employee. They don't need to consider a P60. So do consider that, and do consider if an employee comes to you and says, I haven't got a P60, do consider your argument. Well, yes, you were employed on the 5th of April, but legislation says that I don't have to operate to issue one because I didn't have to take tax from you in 2020-21. P11Ds, don't forget your P11Ds. Deadline is the same, 6th of July every year. And don't forget, accompanying the P11D, any P11DB. That must be HMRC by the same day. And you must pay over Class 1A national insurance. That's the national insurance due on benefits in kind by the 22nd if you're paying electronically, or the 19th if you're paying by check. So those things really haven't changed, but I think the P60 consideration is one. And in my experience, in my professional career, I've issued a lot of blanks P60s because of it. Employees come into me and say, well, I'm going for a mortgage and my bank wants a P60 and my previous employer won't provide one because I wasn't employed on the 5th of April. Okay, yep, justified, I'll produce you one, even though I don't legally have to. Okay, let's talk about the budget. Excuse me, the UK budget 2021. Now, what I always say is that we've got to really recognise that the UK is made up of 4 nations, and there are 4 budgets in the United Kingdom. They call it the UK budget, but let's not forget the budgets in the devolved nations, the one in Northern Ireland, the one in Scotland, and the one in Wales. Now, the one in Northern Ireland, I do look at. It's not particularly interesting from a bookkeeping, payroll, or reward basis, but that's just because of the things that have been devolved to Northern Ireland. Possibly the Northern Irish budget might say something about employment, which is devolved to Northern Ireland, but I really can skip quite quickly through the Northern Irish budget. I'm not downplaying it because it's very important for the people of Northern Ireland, but for payroll, bookkeeping and reward, not important. The Scottish budget and the Welsh budget are important. The Scottish budget becomes increasingly important given the number of things that they're gradually using their devolution powers for. So increasingly important, we look at the Scottish budget, and the Welsh budget, important for the people of Wales, only important really for payroll, bookkeeping and reward when it comes to the Welsh rates of income tax. Then you come onto the UK budget. They call it the UK budget, but really there's a lot in there. If you read the budget report, there's a lot in there which says we're doing this, and it only applies in England. It only applies in England. Some things they can do UK-wide, but they can't do it UK-wide if it's previously been devolved to Northern Ireland, Scotland, or Wales. So the 2 things that have come out of the Scottish budget and the Welsh budget are the Scottish rate resolution for Scottish income tax and the Welsh rate resolution for the Welsh rates of income tax. So both of those are effectively the legislation has been passed. So the rates and allowances document that I've produced is up to date and based on the Scottish and Welsh rate resolutions. So let's look at the UK budget, as I've said before, presented by the Chancellor of the Exchequer. A lot of initiatives in there relate to England. 3 sections to the UK budget. The first section, protecting jobs and livelihoods as a result of the pandemic. So we know that the coronavirus job retention scheme has been extended until the end of September 2021. Great. I think that's absolutely great. Protecting jobs, protecting livelihood, absolutely great. But be aware from July, it's changing where the employer is going to have to make a contribution. Government's contributing 70, the employer's got to contribute 10, and that changes in August. And then possibly the scheme will be dissolved at the end of September 2021. But didn't we think in May last year it was going to go? It's just gone on and on and on. So anyway, it's been extended, but it's changing. Statutory sick pay rebate scheme, that's been extended as well. The 14 days SSP you can claim back from the government. The exemptions for home working and things like cycle to work schemes, they have been extended as well. And there's extra money going into traineeships and apprenticeship support as well. And that is where you look at this announcement in the UK budget and you think, oh, that's good. But an apprentice in Wales is not the same as an apprentice in England, because apprentices in Wales are devolved. So apprenticeship support and traineeships announcement only applied in England. But that's really quite good, actually, the incentives for employers to take on people on a traineeship or an apprenticeship as well. So I really would recommend looking at those as a result of the UK budget. The second part of the UK budget was talked about strengthening the public finances or repairing the public finances. Now, what the Chancellor meant by that, didn't actually say it, but what he meant was it's cost a lot of money with this coronavirus job retention scheme. It's cost a lot of money with the statutory sick pay rebate scheme. Well, someone's got to pay for it. So we're going to repair our public finances somehow. And the third part of the UK budget was about the recovery, so post-pandemic. And I thought that was interesting, to be quite honest, if you're a budget connoisseur, a fan like me. It talked about investment-led UK investment-led UK investment measures. Now, that has not gone down well with the devolved nations. I can tell you, living in a devolved nation, I can tell you that did not go down well. With the Chancellor saying, we're going to invest in this, invest in that. And there's the Finance Secretary here saying, but we're responsible for that because you previously devolved it. So that didn't go down well. And then another thing that I think is worth mentioning is I think they've assigned 8 free ports in England. They haven't decided in Scotland, Wales or Northern Ireland yet. The reason that free ports is worth getting into your head, that terminology free port, all come around because of EU exit, is because from 2022, so the next tax year, there's going to be a national insurance exemption through the payroll. So that's the reason perhaps at this early stage to think free port, yeah, it's going to be a national insurance exemption, but not this tax year, next tax year. What I want to look at is what he said about strengthening public finances. And there was a lot in there, but 3 real initiatives that for the payroll and reward and bookkeeping profession. But he had a real problem, the Chancellor of the Exchequer. What was he going to do? How was he going to get this money? It's quite clear that billions and billions of pounds have been paid out. And the normal thing that a Chancellor of the Exchequer would do, or any government would do, is they'd raise the rates of income tax or they'd raise national insurance. However, just a year before, Boris Johnson had pledged not to raise the rates of income tax, value-added tax or national insurance. So if he had have done that, Rishi Sunak and Boris Johnson would have been lambasted for going against their manifesto pledge, on which they won this majority. So he couldn't do that. So he had to do something else. And what he did was he went through freezing a certain number of limits and thresholds. So he froze the upper earnings limit at the 2021-22 rate until April 2026. He's frozen the personal allowance 2021-22 rate until April 26, and he's frozen the lifetime allowance for pensions as well. And I just want to have a look at the implications of those freezing impacts, because the upper earnings limit, it's good, to be quite honest, one thing, freezing, because that's a nice bit of certainty for software developers, a nice bit of certainty for employees and employers as well. They know what the upper earnings limit will be for the next 5 years. And it's worth also saying that the other thresholds, so the lower earnings limit, your primary threshold, your secondary threshold, they will increment in line with inflation. So those will change. It's the upper earnings limit that won't change. But the real impact on this, which possibly hasn't come out, to be quite honest, and of course the budget report isn't going to say this unless you look right down the bottom in the table of impacts, the real impact is that salaries will increase more than inflation. So by April 2026, the result will be more people are going to be bought into national insurance, or more people are going to be paying at 12%, and employers paying at 13.8%. And I don't think that's really come out, to be quite honest. And that's quite clever, a way of getting money in without raising national insurance or raising tax. He's just got more people paying national insurance. And it's the same with tax, though. Freezing the personal allowance, salaries will increase, so more people are going to be brought into the tax system. Why am I paying tax? Oh, because the personal allowance hasn't increased. More people paying at the higher rates of tax as people's salaries increase. They go from the basic band to the higher band if they're a rest of the UK taxpayer. And then also for the higher earners, you're going to get more people losing the personal allowance. So that's when it goes over £100,000 and you start losing £1 for every £2 it goes over. And those impacts really haven't come out. And I think those impacts will only be felt increasingly as more people are brought into the tax system, or more people start paying more national insurance and employers start paying national insurance. But I'm telling you, those are the impacts. The biggest impact, I think, is the freezing of the lifetime allowance. Now, this is where you can save a certain amount of money, and you're prevented from a lifetime allowance tax charge, and that tax charge can be 55%. So where you take monies above the lifetime allowance, that tax charge can be as high as 55%. But he's frozen the lifetime allowance, and don't at last year's rate. So it's not this year's rate, he's frozen it at last year's rate. So there's no legislation needed to increment it for 2021-22. Remember, or advise your clients, or make sure your clients are aware that the lifetime allowance includes the value of certain amounts of life cover. For example, if you're in a pension scheme that pays a dependency pension, or pays a certain amount on death, or that kind of thing, that is included in the value of that lifetime allowance, 1,007,000 or something like that. I probably won't get there, to be quite honest. Now, also, what it's possible to is get a higher lifetime allowance. So there's a number of protections. So you've got personal protection, no, individual protection, enhanced protection, fixed protection, enhanced, did I mention that? I think there's 4 different protections. However, the big implication is that if you get one of those protections, you must not take any further, you must not make any further provision in your pension savings. How it affects us in payroll, bookkeeping, and reward is that if somebody with one of these protections is automatically enrolled or automatically re-enrolled, they've got to opt out. The problem there is we can't tell them that they've got to opt out, because that's inducing them to opt out. So what we could do the first time that we're advised that they've got one of these protections, for example, fixed protection or individual protection, is we could use the exemption code that should be in our software. If we use the exemption code and we know where that is, when it comes around to auto-enrollment or auto-re-enrollment, that employee or that worker will automatically be disregarded for auto-enrollment. But I think that it's really the responsibility of someone to communicate the fact that the lifetime allowance has been frozen and there are implications. We can't do it. You're going to be careful about how you do it, because we can't give advice, because we're not qualified to give pensions advice. But I think it's responsible to make people aware that the lifetime allowance has frozen, and this could have implications. Got to be careful how we do that communication. Okay, so that's the UK budget, and those were the 3 things that I thought were really, I can't say they were exciting, but that struck me. To be quite honest, and the clever way that the Chancellor is repairing the finances, the clever way he's sticking to the manifesto pledge, not raising tax, not raising the rates of tax or national insurance or value-added tax, but he's getting money in another way. Quite clever, quite clever. So starting the new tax year then, obviously, update your employee records, copy the tax code from last tax year, so it's 2021, into this tax year. If they were on a non-cumulative, if it were on a non-cumulative code, take that marker off. Now your software hopefully should do that automatically for you. Take from HMRC the most recent P9, and that will indicate the employees that need a new tax code. For anybody that hasn't been subject to a P9, look for the P9X. Now, on the bookkeeper's library document that I put together, I've given you a link to the most recent P9X, which tells you that for L suffix codes, they've got to, all L suffix codes have got to increase by a certain number of points. Same with M, and the same with N. That's the emergency tax code for the next 5 years, 1257L. So by April 2026, we should have that really ingrained in us. There should be no doubt, no reference to payroll fact cards. We should know that the emergency tax code is 1257L, which can be operated on a cumulative or a non-cumulative basis, depending on the declaration on the starter checklist, and depending on whether or not somebody prevents a P45 that is in date, i.e. one that we can use, or out of date, i.e. one that we can't use. I wonder if people realize about the in date and out of date. You know, maybe as part of my relationship with the ICB, maybe I'll write something about that, I think, because I don't think people realize what an in-date P45 and an out-of-date P45 is. Now, all of the rates and all of the allowances and the emergency tax code are in the document, which is going to be available for you, called Rates and Allowances. Now, here we go. Off payroll, IR35. Now, this is just a quick run through of IR35. It applies to engagers who are not classified as small. So you need to look at the guidance, and the definition of small is as per the Companies Act 2006. And I can't remember the exact part, but it would bore you to death anyway. Look at the plethora of guidance that's on gov.uk for the definition of small. So IR35 or off payroll applies to employers that are medium or large, not small ones. And IR35 or off payroll is essentially where a worker has been engaged through some sort of intermediary. For example, and most commonly, a personal service company or a PSC. And what the legislation said, and numerous consultations going back for years, I mean, it is years, is that essentially there was this intermediary in the way of the person and the person engaging. But take that intermediary out of the equation, that person would have been an employee. So if they would have been an employee, bar for the personal service company that got in the way, why shouldn't they pay tax like an employee? That is the simple reason for this coming in. So I wonder if off payroll is the correct terminology. Off payroll is the way that they were paid. Now they're on payroll. So I like to think of it as previously they were off payroll. Now they're on payroll. Now, very simple. Once you've assessed somebody, a worker, as being an off payroll worker that needs to be on the payroll, you create a new starter record. So if they bring a P45, you use the P45. If they haven't got a P45, you give them a starter checklist. You must find out where that off-payroll worker marker is in your software. Maybe it wasn't there last year. You need to find out where that is, because it's very important for getting to HMRC, for suppressing student loan notifications, and who knows what it does in your software. Then simply, you pay them through the payroll. Now, there's a lot of guidance about calculating the deemed payroll amount to that's subject to tax, and I would definitely advise you to look for that guidance. And on the document that I put together, the Bookkeeper's Library, I have detailed the guidance and HMRC's webinars, pre-recorded webinars that you might want to sit through. Would I watch a pre-recorded one, or would I watch a live one? Why would I watch a live one when I could watch a pre-recorded one, which is exactly the same? The only thing with a live one, it's just a live person at the end. I'd watch a pre-recorded one. So I've given you all of the links to those. So you find out the pay that's going to be paid, you put them through the payroll, and then you run the payroll and you deduct tax, national insurance, and apprenticeship levy. And they are the only things that you deduct. You do not deduct student loans. You do not deduct pension. They are not a worker. They're a deemed worker or a deemed employee, i.e. the legislation has deemed them to be an employee, only for the deduction of tax, national insurance, and apprenticeship levy. Then simply at the end of the month or the end of the week, the end of the month, I beg your pardon, you remit the money to HMRC and you declare them via real-time information. Now I've simplified that on one slide, but it's a lot more complicated than that. So I would look at this Bookkeeper's Library document that I prepared, which is going to be made available, and I'd have a look at those webinars, or look at the legislation if you want to. Perhaps wouldn't recommend that. Have a look at the guidance that's out there. What's really important for these off-payroll people that are now on the payroll is they don't get employment rights. Now, that I'm sure is going to be challenged in years to come. They're an employee for the purposes of tax, national insurance and apprenticeship levy, so the legislation says, but they're not an employee in respect of accrual of holiday pay, the right to be paid at the national minimum wage, that kind of thing. I'm sure that's going to be challenged somewhere along the line. Assessing the employee to see whether or not they're off the payroll, they should go on the payroll. Use this HMRC's Check Employment Status for Tax tool, free CEST tool. So what it will do, it will ask a number of questions. It will say, well, what does the person do? Is the person subject to supervision, direction, control, and can they send a substitute? And that's really important as well. So use the CEST tool. It's free. Now that's a run through, a lot of guidance out there, absolutely. Now, something else that's happening from 2020-21 is changes to the construction industry scheme. Now, I know that this applies in payroll, I know that this applies in bookkeeping. It's rather offensive, therefore, to read the policy paper from HMRC that said we're making these construction industry scheme changes to tackle what we perceive is abuse of the system. And there's 4 changes that they're making. And you should be aware of this, the set-off amendment power, that's what the policy document calls it. And that's where the employer cannot justify the construction industry scheme deductions that have been suffered and declared. And what HMRC can do, if the employer can't justify them, HMRC can just go in and amend the EPS. All sorts of ongoing problems that causes for the employer. The cost of materials as well is changing as well, and a deduction is only going to be allowed in 2021-22 and onwards, where the subcontractor, the subbie, directly incurs the cost in performance of his duties under that contract. Then there's the third change, deemed contractors, where what it's going to mean is that businesses, engagers are going to monitor their construction expenditure, are going to have to monitor it more regularly, because it's all to do with the construction expenditure in the last 12 months rather than the way that it used to be. And where the construction expenditure exceeds 3 million in the last year, CIS, or Construction Industry Scheme Tax, comes in from the next payment that's made. Have a look at this policy document, or have a look at the legislation, 2 bits of legislation, finance bill, and there's some income tax regulations as well. And that's interesting as well, CIS registration penalties. Now, I know that a lot of bookkeepers and agents register their subbies for clients. Now, if the a person doing the registration is almost forced to do it and apply for gross payment status and supplies false information, the person could be subject to a penalty. And I think that's a bit of a worry. The CIS registration penalty, I think, is possibly the most worry. The set-up amendment power, that's a problem that HMRC can just come in and amend the EPS. They can amend the CIS deduction suffered on the EPS. So what you have to make sure you do going forward is that the CIS deductions suffered, you've got to be able to justify them. That's quite simple. Do have a look at the policy paper that's on gov.uk. Now, having mentioned off payroll before on the before slide and CIS on this slide, if you've got somebody under the construction industry scheme, having done an assessment, you find out, well, actually they're an off-payroll worker. Off-payroll working rules take preference over CIS rules. So they might have been paying construction industry scheme tax in 2020-21, but now they're paying tax via PAYE under the off-payroll rules. So consider that as well. So when you're looking at assessment of workers, or employers are looking at assessment of workers, they're going to have to look at their workers that they currently have as well, that might be under the construction industry scheme. I hope that ties the two together, IR35 and CIS. Payrolling benefits. Now, I don't know if employers are asking you to payroll benefits. Hopefully they should be, because it gets out of the way of the burden of preparing the P11D. And I think I would encourage all employers that have benefits to payroll those benefits. Currently it's on a voluntary basis, but knowing the UK government and HMRC, anything that's voluntary soon becomes mandatory. We're allowed to voluntarily payroll most benefits apart from accommodation benefits and beneficial loans. Now, we did expect that to happen from 2021-22. HMRC have come back and say, well, we didn't have the time to put in place the functionality, but it's going to be available from 2022-23. Now, from that tax year, so from next tax year, it should be that any employer can payroll all of their benefits that they have at their organization. And I wonder if mandatory payrolling will follow soon after. I don't know. Any employer that was informally payrolling benefits can no longer informally payroll benefits, because that ended on the 5th of April. So what an employer should have done is recognized that they were informally payrolling benefits, recognized that informally payrolling benefits could not continue past the 6th of April. So they should have registered formally to payroll benefits. If they haven't, I still think that an employer should contact HMRC and say, oh, do you know, I was out, or claim some excuse, because I'm sure HMRC are going to be quite lenient on that. But the most important message there, an employer that claims to be informally payrolling benefits cannot do it properly and legally without registration from the 5th of April 2021. Now, with regards to cars, in actual fact, I think I'll whip through this because it's all in that document that I produced. But two things which will be available on the slide is the electric range field. So you might want to have a look at the booklet 480, which talks about the electric range field and the date first registered. If you're payrolling car benefits, those two fields have got to be completed in the payroll software from 21-22. Other bits and pieces that have changed, national living wage. Now, what is important with the national living wage? Everybody says, oh, it's effective the 1st of April 2021. It's not effective the 1st of April 2021. It's effective when you for the first full pay reference period that starts on or after the 1st of April 2021. So if you've got a monthly payroll, it's quite likely that the pay reference period, the period of time you're paying somebody for, is the 1st to the 30th of April. But if you've got a weekly payroll, it's quite possible or probable that the 1st of April will straddle the pay reference period, bearing in mind the 1st of April was a Thursday. Well, the legal obligation is not to start to have to pay someone at the national minimum or the living wage until the start of the pay reference period after the 1st of April. Nothing to stop them paying from the 1st of April if the employer wants to and do a pro rata period. Look at national insurance for veterans as well. And I would really recommend that you look at HMRC's policy paper. Now, the national insurance for veterans, this was promised in the Conservative manifesto last year as well. And this is for employers that take on veterans from the armed forces. And essentially what the legislation is putting into place is that if an employer takes on somebody from the armed forces, so they were ex-armed forces, they take them into civilian employment, there'll be a national insurance holiday for the first 12 months of their civilian employment. Now, what's really important is that in 2021-22, the employer is going to pay national insurance, keep records of the national insurance, because they're going to have to manually claim that national insurance back. And details will be provided in April 2022. So what you've got to do, if this applies to you, what you've got to do is make sure that your software is capable of recording who these people are. That's my answering machine just going there. How unprofessional is this? Plan 4, I've talked about Plan 4 loans. This applies to Scottish borrowers that took their Scottish student loan out from the Scottish funding agency rather than anywhere else. So HMRC will define who is a Scottish borrower. It's not for the employee or the employer to define. HMRC will define all people that are currently on Plan 1 with a lower threshold and move those Scottish borrowers to Plan 4 with a higher threshold. And it's really important that all new starters coming in sign the new starter checklist, which will say, have you got a Plan 1 loan, a Plan 2 loan, a Plan 4, or a postgraduate loan? So it's really important that employers use the new starter checklist to find out what Plan 4, what student loan plan has. Now, something that I think is going to be something we'll hear more of, perhaps highlighted because of the recent Uber case, which is all to do with employment status. So a few of their self-employed workers went to the Supreme Court and said, actually, we're workers. We're not self-employed, we're workers. And for those few people, the Supreme Court said, yes, absolutely, you are workers because of the level of supervision, direction, and control that Uber has over the work that you do. And subsequently, that led to Uber coming out and saying, well, worker status is going to apply to all of the people that are doing work for us. And you wonder whether or not that will extend to other companies. For example, your Deliveroo, your Hermes, that kind of thing. Similar arrangements, you wonder if that will extend. And I wonder what's happened to the employment bill that came out to great fanfare in December 2019. And I don't know what's happened to it, to be quite honest. So keep an eye out for that employment bill, because it's supposed to implement some employment reviews that were undertaken, goodness me, a number of years ago now. But it seems to have disappeared. So keep an eye out for the employment bill. Oh, and this is, well, I'm coming towards the end now. About some consultations and calls for evidence that are really important. Now, there were a number of condocs, we call them, consultation documents, and calls for evidence that came out. And if you're into that, I would have a look. But the two that I think affect the payroll, reward, and bookkeeping profession are the most are one, this call for evidence called the Tax Administration Framework Supporting a 21st Century Tax System. Now, basically, what they're looking at is making sure that HMRC can make it as easy as possible to get as much revenue in as possible. And in that respect, HMRC are responsible for revenue collection in terms of income tax, national insurance, value-added tax, corporation tax. So there's a hell of a lot of ways in which HMRC can get revenue. So that's why I put down it's a massive call for evidence on, well, can we reform VAT? What can we do with PAYE? What can we do with the construction industry? What can we do with this? It closes on the 13th of July, the call for evidence. Now, I think the way that I'm going to approach this is not try and dip into a little bit of VAT and a little bit of PAY and a little bit of construction. I think I'm just going to focus on one thing and say this is a real problem for me, based on my experience. Now, what in professional bodies will do is they'll all put in their submissions saying this is a problem, and an HMRC could increase their revenue by doing this, doing that. And what the evidence response will do, it will say, well, the top 10 issues were these, and we're going to focus on the top 10. Now, I would really be interested in working with the ICB on the things that you find difficult with the collection and administration of the tax system. I don't want to focus on a load, but I'd really be interested in what you find administratively burdensome, really interesting. And I'd be really interested in this one as well. And I know the ICB responded to the first one, and I'd like to be involved. Was that you, Garry, that responded to that?
Yeah. Well, we have responded, obviously, raising the standards, and I just hope there is an appetite within government to take notice of what is being said, because I think generally speaking, we're saying the standards must be improved and we must be better governed, better regulated. Whether or not they'll shy away from that, and there'll be the good guys who do everything, and then there'll still be the also-rans, because there's a lot of people out there who call them, well, it's like I said before about anybody who calls themselves a guru, I always worry about. I have a similar sort of shaky feeling when anybody says, "Oh, I'm a tax advisor," and then when you speak to them, why, are you qualified? No, but I've been to this seminar and that seminar, and I've got a piece of software. It worries me to bits, I'm afraid.
Absolutely, and that's why I really think that this is going to be one that that the ICB should respond to, and I'm quite willing to work with you, because first of all, it's asking, well, give a definition of tax advice. Excuse me. And the reason that it's going to affect payroll, reward, and bookkeeping professionals, excuse me, is that they say a tax advisor may be an employer who gives advice to an employee about their taxable benefits for the year. Well, that doesn't strike me as advice, to be quite honest. Unless it's just advice, well, yeah, I'd recommend you take this company car. I'd recommend that you did go to the Bupa scheme. I'd recommend you did go into cycle to work. Yes, that's advice. I can see that. But advice on whether or not it's taxable or not taxable, that doesn't seem to me to be advice. A bookkeeper maintaining records of money coming in and out of a company. So we could be caught by this. ICB members could be caught by this. Software, now that's a bit of a worry when they talk about tax software could be regarded as giving tax advice, specifically if it performs auto calculations. And one of the biggest auto calculations or assessments that it does is assessing people for need they be auto enrolled or auto re-enrolled. So tax software has got a bit of a consideration here. And the questions I ask, do we guide or do we advise? And I call myself now a guy, someone that provides guidance. I've never thought I provided tax advice. I'll tell somebody if they're non-compliant with legislation, but that to me doesn't constitute advice. But HMRC might think differently. And I think we do really need to get our heads together on this, because I think it's a worry for employers, for payroll professionals, for software professionals, and bookkeeping professionals as well, because of this requirement as the consultation, or the consultation calls it, for professional indemnity insurance. So Garry, heads together.
Yeah, no, absolutely, Ian. I mean, our members all have to have professional indemnity insurance anyway. They always have done, right from day one, 20 odd years ago. So I think that's very important. I know a lot of people out there don't have it, but they're certainly not our members. So that's something. However, professional indemnity insurance only helps you out if you've not done something illegal or you've made an error. But the point is, I think if we get it right, then there shouldn't be any errors. And it is an absolute fallback. And I'm not sure what the government's trying to do. I mean, I'm trying to read between the lines here. Are they actually saying we're going to put so much onus upon this that you're going to need an external advisor, who therefore we can regulate and make sure they're qualified? Or are they just trying to catch everybody in this so that, if I tell my employees perhaps that they should have a pension scheme, and tell them where to go for their pension scheme, because it's our company pension scheme, and therefore if it doesn't work, I could be responsible for giving wrong advice. I mean, I think that's just going a little bit too far, isn't it? I don't know.
I think, and I think we really need to look at it, and we need to be clear about what is the intention. What is the intention of this, and who is going to be caught by it? Because I think that the fact that tax software professionals or payroll software professionals could be caught by this came as a bit of a surprise, to be quite honest. It really did.
And unfortunately, guidance and advice is very similar to evasion and avoidance.
Exactly.
It sounds obvious, but when you look at it in more detail, it isn't. So yeah, we will certainly work with you on this, and we will be putting together quite a large report on this. I know people like CIOT are obviously getting heavily involved in this, but I think we've got a considerable resource available for certainly the micro and small businesses And they're the people really at the moment who don't have large departments and who may, if this goes through and somebody forgets to make the wording fit correctly, they're suddenly going to find themselves as employer and advisor. And that could be disastrous. Yeah, absolutely. But I think together we sort something out. So yeah, we will definitely work.
Yeah, terrific. Yeah, no, that's terrific, because I think that'll have real implications. And I look at HMRC guidance that they call it, and there's a number of guidance documents like the CWG2, the further guide to national insurance and PAY and national insurance. But in actual fact, that's not guidance itself; it's advice. So even they're confused.
Yeah, absolutely. And I think also, I mean, you deal with a lot of larger companies where they have big payroll, but who is the responsible person in that scenario? You know, where does that stop? Is it the head of HR? Is it the head of payroll? Is it, you know, who is going to fall into the advice there? It's a bit like the money laundering reporting officer suddenly was thrust upon everybody, and everybody suddenly had to have one. So yeah, and they've got quite an onerous position. I can see somebody like this being in exactly the same difficult situation where a very large company turns around and says, well, you know, it's the head of HR or something like that who's responsible. They must have advised incorrectly.
Yeah. So does that mean, do employers sort of like start getting really shaky and say, no, it's nothing to do with me, go somewhere else, I'm not advising you, I'm not guiding you? And that would be a shame, because isn't that what we're there for, to provide guidance? You know.
Yeah, I suppose the thing is, I as I say, I'm reading between the lines. I wonder whether they're just trying to say too many people are advising without the knowledge to do it properly, and therefore they want to stop people giving advice. It can go two ways. The other way is that it will stop anybody talking to anybody about anything. And here is a leaflet, go away and sort it out for yourself. And unfortunately, 99% of the employed population, I would think, are not in a position to work out the best thing for them. They do rely upon somebody, you know, their employer, their HR department, whoever it is, because they always assume that they know better. You know, it's like the doctor saying, yeah, oh, yes, that looks nasty, take this leaflet away and think what you've got.
Yeah, no, that's right. I don't think, as payroll professionals, as bookkeeper professionals, if somebody queries their tax code, for example, we can't but help look at it and say, well, oh, that looks as though that's been taken into account. It would be very unlike us and against our nature to actually say, go away, look at this web link. You know, it would I would feel uncomfortable with that. So, okay, well, we'll get our heads together on that. But if call for evidence massive, I don't even know how to approach that, to be quite honest.
No, but yeah, it is going to need some thinking. It's a bit like my old careers master who just gave me several leaflets because you know, he'd been told. I remember, well, I don't think how many years ago it was, but basically he said, I'm afraid I can't advise you because I'm not skilled, and I've been told by the school I can't advise you, but have a look at these, which was interesting. But anyway, so we don't.
Interesting. When I was when I lived in Essex years ago, my current partner worked for a big retail company, and letter came through auto enrollment. I said, "Oh, that looks quite good percentages, you know." And I said, "Yeah, no, go in for that." Next day comes back and says, I've told everybody in the canteen that you said it was a good pension scheme. I said, I never said it was a good pension. I never said that. I said, you go back to that canteen and you tell them that I'm not a pensions advisor as well. You know, so that was only something, that was an opinion that my partner translated into guidance, which then there's a lot of Primark people that could have gone into the pension scheme because Ian Holloway said it was fantastic.
Yeah. Well, this is what we're... Ian, I'm disappointed. I thought you were going to tell us all exactly what to do, but never mind. Are you done on your presentation? Can we start?
I am. I think it's the last. It's the last slide. So, hopefully, I have talked about finalising tax year 2020-21. There are still some things that we've got to do, and then starting 2021-22. I've gone through the budget, and the three things that I think are the most important thing of the freezing of those thresholds, and how somehow we've got to communicate those, to be quite honest. Yeah, tax year 2021, I think that bookkeeper's library will be really handy for you, and the rates and allowances document really handy for you as well. And then the two consultations are the conduct and the call for evidence. And I am really sincere in wanting to work with bookkeeping professionals in my role. So please do interact with me. Gary, communicate with me. I know Amy communicates with me, and Jackie as well, because we can do things for the benefit, my benefit, and the benefit of you as well. So let's work together. And then,
Yeah.
Gary, I'll shut up, shall I?
No, well, I wouldn't put it like that. You know, it's rare for me to sit here saying nothing. So, you know, everybody's probably a sigh of relief that you've shut me up, which is good. But I'm about to start again as I go through some of the questions. What I would say is that, yeah, this was the first toe in the water, as it were, of a very important subject. But certainly we obviously have said that we will work with you very closely. We've signed you up for a series of things. But I think that what those things become will change, they will evolve over time, but we need to integrate totally with what's going on. You know, our members are working with this. And I think the other thing is that as bookkeepers, we tend to work with small and micro companies for whom our bookkeepers are the only advisor that they have. So either they call upon us for everything, or we can see that they are not doing something because actually they're so busy making something or selling something, they've got no idea what else they are supposed to be looking at. So we need to be aware of all of the things, really. I mean, we've got to be jack of all trades and master virtually all of them, because we've got to be able to say, oh, by the way, did you know you can't do that when you're employing somebody? Or, you know, and I mean, I had somebody on recently who came on, and he wasn't a member, but he was an employer, and he said, I think I'm paying my people less than the national minimum wage. And I said, well, how much are you paying them? How many hours are they doing? He wasn't. He was about a penny over. He said, oh, thank goodness for that. But the thing was, although it sounds amazing, he didn't know how to calculate it. And this is the point, really. People go into small businesses for different reasons, and it's normally not because they want to be mathematicians, and it's not because they want to be bookkeepers, you know. And I think a lot of people get caught because they just don't know any better. But anyway, of course, you've got the big companies who we know get away with all sorts of things, but they are being caught up with. So now, you've obviously rattled a lot off here. I'm sure they're sitting back now at the moment and taking a breath, trying to keep up with you. Do you have time for a few questions, or would you rather?
Let's go for them. Yeah, go
Let's
for them.
go for a few. Yeah.
Yep.
I've got some on the chat line. First of all, let me go to the top. Let's see what we've got here. Can you talk about directors' NICs? Why is their NICs done differently to other employees? Does it have a consequence if they're treated as an employee rather than a director?
Okay, look at, does it matter? Well, historically, directors were always, could control the way that they were paid. So that's why HMRC brought in this annual earnings threshold rather than the pay per pay period one, like for normal employees. Have a look at the HMRC guidance CA44, because you can operate directors' national insurance in two ways. One, using an annual threshold. So rather than the per period lower earnings limit, use the annual lower earnings limit and the annual primary threshold, or you can treat them as a normal employee as long as they're paid a normal amount each month. So do have a look at the CA44, and if the person that's asked the question needs me to link to the CA44, do refer them to me. It's no problem.
Yeah, Sean, you're asking about payroll software. At the moment, I think it's a little bit early to get Ian to put his coat to the mast on this one. We will be looking at all of the payroll, and we are in touch with them. We will be going through, and it amazes me that if you get a different piece of software, it can give you different answers to what I would have thought was a pretty black and white question. But it is happening, we know that, but we will be going through it. So don't worry, we will cover that very shortly. Cyril Boyne, or Buone. What's happening for a business starting on the 1st of April for their payroll? Not sure what that means.
What's happening?
Oh, well, never mind. Nadine, yeah, I saw that before. Sarah, we've trodden on a political toe here. Can I politely request for future that we should not be showing party logos, as ICB is a non-political organisation? There's an election in Scotland on at the moment. I'm not sure they were party logos, but yeah, okay.
Well, fair play. Yeah, and I take your
Fair play,
take your point. Yes.
Yeah. Ian, regard yourself as slapped over the wrist for that one. And I missed it. I must admit, I just saw the flag. Okay. So sorry, Sarah. Alex Kinnersley, hi Ian. Great presentation as ever. Can I ask a question about tax codes? An employee that I do payroll for has 2 jobs, but we need to change the primary job so that the personal allowances apply to the job that I do the payroll for. At the moment, his other job seems to be the primary job. Can he make this change via his personal tax account?
Absolutely. Absolutely can. Yeah.
Alistair Stevenson, those HMRC webinars and OPW have been worth watching.
None
Sarah,
of them? You said none of them or all of them?
All of them.
Oh, all of them. All right. Okay.
Yeah. Sarah, HMRC have sent us notifications already for change of plans for the individual students. Good to know for future employees in Scotland. Great. Elizabeth Layton, when contacting HMRC, is this advice or guidance? I think Ian's already said. They're quite sure themselves, are they?
No, I don't think they know.
No, right. So straightforward on to the main question. Woo, I'm switched off straight away. Pauline Chapman, hi. Ian, could you please confirm how you calculate holiday pay for staff on 0 hours contracts?
Let me take that offline. Can you send that to me, Gary? And
yeah,
let me come. Yeah, let me take that offline.
If once you've answered that particular one, I think it's something to bring up in future, because we're getting a lot of this, and holiday pay is difficult. The other one that we've had a lot of recently is people who are leaving, and how the bank holidays now working with that, and also people who are part-time and happen to be working on Mondays, but they get all of the bank holidays, not only part of them.
Yeah.
So there's all sorts of very strange anomalies at the moment.
Yeah. Let's sort this out. Let's do something definitive, I think. Yes.
Another anonymous saying IR35 very applicable. Yeah, definitely is. Ian, you were mentioning before these personal services companies. There's been a bit of a hoo-ha recently that we're following up with HMRC. These umbrella companies that are there. It appears that when they register their company, they put themselves down as bookkeeping services, which they're not really. I mean, they are tax fiddles, I suppose. But there was an article in the Times following an HMRC report. And in this report, it said that 20% of all avoidance schemes were run by people who were bookkeepers. So obviously, it blackened the name of bookkeeper unnecessarily. So they are going to be putting that right shortly, we understand. Thankfully, not many people read the Sunday Times, obviously. It wasn't quite as bad as we thought. But so it's weird. You'd think that somebody like HMRC, an organisation like HMRC, would read between the lines and realise that they're not really bookkeepers, and why therefore say that 20% of all avoidance schemes are perpetrated by bookkeepers. It's a nonsense, but still, never mind. Valerie Haig. If a sole director has employer pension contributions paid by the company but no employee contributions, does this go through the payroll? If so, how? As a benefit in kind?
Send that one to me. Send that one to me.
Non-contributory pension, isn't it? Yeah. Okay.
Yeah. Send it to me.
Sue Raison, and I'm sorry, that's a hyphenated name there. I've got Sue Raison Ab. Never mind. What's the headcount trigger for gender pay gap reporting?
250. 250 relevant employees is your first headcount figure, and then out of your relevant employees, then you have to consider how many were full pay relevant employees, and that's where furlough comes in. They might be a relevant employee, but if they were on furlough leave, they're not a full pay So you have to exclude them from certain gender pay gap reports. So
Right.
but 250 is your starting point.
I would have thought that's a relatively small number of our clients will be 250, but I know some of them do cover that. So yeah, that's interesting. Sally, if someone leaves on the 4th of April, but final pay is made on the 7th, so in the new tax year, do they get a 2021 P60? I told you not to expect an easy ride here, Ian.
2020. Well, I would give, if it were me doing the payroll, I would give them a P45 and I would give them a P60 as well. And then you'd wonder about giving them a P60 next year as well, although the obligation there strictly should be on the employer at that time. But bear in mind, if you didn't give them a P60, the employee wouldn't end up with a P60 from anyone.
But I think what she's saying is if they leave on the 7th, therefore
no, they left on the 4th, didn't they?
Year, which P60 is it? A 2021?
Oh, I would give you give them a 2020-21 P60 because they're not due one for 21-22 until the 31st of May 22, are they?
Okay.
And the specifications only just come out as well, I think.
Great. Pauline Chapman, can the employer reclaim SSP only if the employee is off due to coronavirus?
Yes, it's COVID. Yeah, it's COVID related, but there's a number of COVID related. So it doesn't actually have to be the employee. It could be the employee caring for someone, as I understand it as well. Have a look at the details of the statutory sick pay rebate scheme, but it's COVID related or pandemic related.
Great. And by the way, everything that is covered in that we're covering is included. All the links and everything else Ian's referring to. We do have a special page on our hub. It's under resources, and it comes next to tax agents, I think. But it's all about payroll. So everything that we can find, which is of any interest to you at all, will be put on there. So that's all sources. So everything's on there. Just keep looking. Nicola Payne, is the SSP rebate scheme only 14 days per employee for the whole of the COVID period? Or if someone has had 2 periods of isolation, totaling more than 14 days in total, can we claim for each period?
It's 14 days once. You pay SSP, you can pay SSP, but you can only claim back one lot of 14 days.
Great. Jim H, great webinar, very helpful. Where can I get the notes? Yes, Jim, I've just mentioned that already. Pauline, I have registered as an agent for PAY and VAT and have my agent online services account, my agent services account. I have authorized all my clients and entered their codes. However, my software will not accept my gateway ID and password in order to file PAYE for them. Do I need to register separately for online filing? Confused.com.
Send me that one. It sounded like send me that one and I'll look at that. Yeah, confused.wales here.
Yeah. Sally says thank you very much. So that's brilliant. I think that's the end of, we've got a few more coming in, but I think the trouble is that they will keep coming in. So Ian, I think that was a very interesting first thrash there. You do talk very quickly, which you obviously needed to do. It still took you an hour. That's brilliant. We got through a lot. No, it's very good. I mean, I think the thing is that we found out very much as the case in the conference that people were glued to you from start to finish. It was obviously because they didn't have time to get away for a cup of coffee because they were obviously going to miss something so much because you went through so much. That's it. That's fantastic. So that is good. We will get our heads together on all sorts of things, including the reports, the white papers, etc., but also on more about what we're going to do in future events as you get to know more and more about our members rather than you talking to them all the time. Hopefully we can get far more of them now talking to us. We can pass it on. We can start to target a bit more. But I think generally speaking, brilliant first day. That was fantastic. And yeah, we look very much forward to working with you. And I hope everybody that's been on today has enjoyed this. Donna McSherry has just said, thank you for the webinar. Great. It's always good to know people have been listening.
Yes, thank you.
Taken over 300 on the main registration, but then on top of that, we normally get at least double that on Facebook, and then we've got LinkedIn's and various other things coming in. We will gather together the questions. Alex is working in the background here today, so he will start to put through all of the questions so that Ian gets them, and we will try and get as many of them answered and back to you. It's just another one of our many resources that we're doing. We've also had I think it's about 20% of the people on today are not currently members of ICB, so it's nice to know that you even though you're not a member, you do trust us to give you this resource. I hope that some of you will actually think of joining, because this is only part of the resource we give to our members, obviously, and there's a whole lot more, and we want to make sure that as many people as possible in this sphere are professional, that they know what they're doing, that they're properly qualified, they're regularly tested, they get good access to CPD, because I think the thing is, although bookkeeping itself has been around now for 547 years, I think it is, it's exactly the same, only always different. You know, everything is different, everything changes, even though it's that old and that set in stone. And payroll, from what I can see, is just the same. We're getting a lot of our software companies now saying that things are changing, they're adding bits to this, they're opening up, becoming more HR packages. So there's a whole sphere, and as Ian's already highlighted today, advice and guidance could take you into a whole new ball game in the future. So thank you very much, Ian. It was lovely to have you with us. Thank you, everybody.
Oh, thank you. Thank you, everybody.
And we'll see you again shortly. Bye, everybody.
Yeah, definitely. All right. Thank you. Take care.